Welcome to Global Investment Insights, a weekly podcast brought to you by ADCB Asset Management. My name is Kishore Muktinutalapati, Head of Investment Strategy. With an objective to empower you with investment insights, on this program we discuss various perspectives that are shaping the global investment landscape. In this episode, I would like to give you an update on our base case for the macro outlook, discuss our investment strategy, and highlight the couple of changes we recently made to our tactical asset allocation. Let's start with our macroeconomic outlook. As a base case, we think the global growth will likely hold up well over the next 3 months. While yield curves remain inverted and signal recession, we note that several other indicators including job market point to resilience. Broadly, US consumer remains in a good shape. We see global manufacturing sector close to bottoming out. The services sector continues to be strong across the board but is moderating. On inflation, in the absence of any major shocks, the disinflation process should continue over the next 3 months. We're watching the risks emerging from the recent sharp rise in oil prices though. Inflation in the US should continue to surprise on the downside as movements in the rental component turn favorable. Despite concerns, we do not yet see tangible signs of a wage price spiral. Long-term inflation expectations remain well anchored too. Moving to the monetary policy, we believe that the US Federal Reserve is close to being done with the interest rate hikes for this cycle. However, we do not rule out another 25 basis point rate hike from the Fed, and markets seem to have priced that in after the recent FOMC meeting. We do not see rate cuts till mid-2024. The European Central Bank, and to a less extent the Bank of England, may have further tightening to do. Bank of Japan should turn hawkish at some point. In terms of asset classes, fixed income markets are now pricing in a better economic outlook and thus a hawkish Fed. Yet, the uncertainty about the timing of the first rate cut is likely to be a source of volatility in financial markets, especially for bonds. Equity sentiment has improved during the recent months, but positioning is still light. While there is value in bonds over the long term, near-term trajectory is still unclear. Tactically, we are overweight equities and underweight fixed income. Risks to our constructive view are in the form of a sharp deterioration in the global growth outlook owing to an escalation in unforeseen systemic risks, much stickier inflation needing central banks to turn even more hawkish, and investor sentiment deteriorating rapidly. Consumer health risks are also worth watching. Against this backdrop, we made 3 changes to our asset allocation in late September. Viewers can see our current recommended tactical asset allocation for a balanced risk profile investor on the screen right now. First, we trim our off-benchmark position on Nikkei 225 in Japanese yen terms to 1.5% from 2.5% earlier. We remain constructive on the outlook for Japanese equities, but given the yen sensitivity of the equity index, we still prefer an FX hedge route. However, after the recent rally, we trim our off-benchmark position there. Second, we upgrade global high yield to neutral from an underweight. We expect bear flattening of US Treasury yield curves to occur in the near term before a full-blown bull steepening occurs early next year. Under such a scenario, US high yield could still benefit and drive performance given its short duration characteristics. Third, we turn positive on the near-term outlook for the US dollar. US growth exceptionalism, relatively hawkish Fed, and potential for a bear flattening of the US Treasury's yield curve all render themselves to a positive outlook for the US dollar. On a relative basis, we turn negative on the outlook for Euro, the British Pound Sterling, and the Japanese Yen. Thanks for listening. We hope you found this podcast useful. If you did, please do share this and other episodes with family, friends, and colleagues. For more information, please reach out to your contact at ADCB. You can also log on to our website at www.adcbam.com. You were listening to the Global Investment Insights podcast from ADCB Asset Management, and my name is Kishore Muktinutalapati.